Welcome to the Porter & Company Black Label Podcast, your home for provocative insights that lead to lasting wealth. And here are your hosts, Porter Stansberry and Aaron Brabham.
Welcome to another Black Label show. I got my good friend Porter Stansberry.
You're bringing the energy,
today, buddy.
Hi, everybody. I'm wearing a hat today, and it's because I've been at the farm for 2 months straight now. I haven't been to New York to get a haircut.
I don't know how your hair actually looks like you brushed it and stays that way under the hat.
So I got a hat on. I know it's rude, but I also wanted to tell you that I'm very excited about this. My lovely assistant, Alicia, got me my own chud hat. I'm a big fan of the chud movement. And if you guys don't know what a chud is, you need to go on your Google there and ask, because a chud is basically a non-attractive, not very successful, angry white man. And I think that describes me pretty much to a T.
I know, you're not angry. You're fun.
I'm a chud.
Nah, you're fun, man.
If you're a chud, you're going to like this next rant.
Yeah, let's do it. Let's
okay.
Jump into it.
So, as I think you may know, I recently published my first, I would call it my first real book. Mm-hmm. Now, let me explain what I mean by that. I've written lots of books. I've sold hundreds of millions of dollars worth of books. But all those books were written with the intention of selling a newsletter. Mm-hmm. They were not purely about ideas. So, fortunately, I at 53, I finally have enough money and time. I could write a real book.
Right.
So, I have written a real book. It's called 2029, The End of America. You can get it on Amazon. Mm-hmm. It's a real published, real trade book, the real thing. All cited, all sourced. You know, I did my best. The End of America, 2029. And it's about a couple of things, but what it's really about is how America lost its way. So when I was doing the research for this book, I found out a couple of things that I knew a little bit about already. Mm-hmm. So for example, Social Security is going to run out of money in 2029. That's why the title of the book is 2029. I learned all about the fourth turnings. Mm-hmm. I learned about how there are these 80-year periods of time that match a very long human lifespan. Mm-hmm. And how throughout human history there has been these trends, and they're very cyclical.
And we're right at the fourth one.
And we're now at a fourth turning. Mm-hmm. And so I see this all as the timing for what I believe will be the great monetary reset. Social Security is going to run out of money. The government's already going broke. The fiscal deficit this year is going to be 6 or 7% of GDP. We're about to see inflation take off, in part because of the war in the Gulf, but in part just because we're printing so much money.
Yep. Okay,
so that's important, but I knew a little bit about that already, right? That's not like...
You've been writing about that forever.
That's like new to me.
Right.
What I was trying to figure out is I know philosophically, economically, and from history that when cultures and economies, when countries begin to debase their currency, they also end up debasing their culture.
That's right.
They debase their society, and everything tends to fall apart. And the reason why is very simple. A sound currency facilitates free exchange.
That's right.
So it makes it very efficient for you and I to cooperate. When there's a tax in that, when that becomes unreliable, it gets harder for us to cooperate, and therefore we have to start doing other things like violence and fraud and prostitution and gambling and all that
drugs.
And so that's what you've seen explode in our country.
Right.
So the leading cause of males in the United States between the ages of 18 and 34 is fentanyl today.
Yeah,
that's not a society that's thriving.
No, not at all.
Well, listen, let's do something more useful.
Yeah, let's on this show we try to offer things that are financial, analysis, something that people can grow their wealth in. I think I got somebody for us today, Porter. Someone you've known for a long time.
He is a legend. He's a legend. Do you want to do the introduction? Or you want me to?
Let's just go straight into it.
Let's bring him in surprise.
And we're going to let him tell a story a little bit.
Let's do it.
And none other than legendary John Doody.
John, it's so good to see you. I can't believe how long it's been. I don't think I've really talked to you face to face now for, 4 or 5 years. But it's great to see you. And as I was telling you before we got started, I'm so glad you're back in the game. Can you, just for some of our listeners who may not know anything about you at all, would you mind just giving me a 30-second recap about how many decades you have been involved in the gold analyst business and some of your most famous recommendations from your career?
I was a professor of economics at Bentley University for 20 years. And I got interested in gold because of my grandfather gave me this coin, this 1 ounce coin, in 1971 when Nixon went off the gold standard. I was I was at grad school at the time, visiting my grandfather in upstate New Hampshire. He was a skinflint school teacher, never owned a house because friends of his had lost their house because of mortgages in the Depression. And he said, I'm always going to rent. So anyway, Gramps gave me this coin. It was Nixon had just gone off the gold standard, and it was worth $35. And he said, hold on to it, John. And I did. I still have it. So now it's worth about $4,700. So Gramps was right. And if you look at what gold has done from back then, $35 to now, it's a compounded annual rate of increase of over 9%. I don't know of any single investment that you could do for that period of time and get that kind of rate of return. Sure, if you were one of the founders of Amazon or something like that, but anything that a normal person could buy, nothing's going to touch that.
Yeah, and also with no risk of bankruptcy and with much less volatility in the stock market. But let's get back to, if you don't mind, just because I think that your history in this industry is really unique and very valuable. When did you start the Gold Stock Analyst? And again, like the theory behind it, and then what that led you to as an investor, because your results are some of the greatest investing results of the last 40 or 50 years.
Well, thanks. What led me to it was, of course, that coin to begin with. But, as a teacher, professor, you still don't earn very much money. So I was looking for a way to supplement my income. And I remember the coin that Gramps had given me, and I started looking at gold stocks. It's a unique industry. Everybody makes exactly the same thing. It's not Coke versus Pepsi, sort of similar, or Chevy versus Ford. It's exactly the same. And they sell it at the same price. There's no difference in the price. And so that I thought there had to be a way to figure out who's better, who's worse. What's the way to analyze them, because they're all different in terms of the stock price, the number of shares, the capitalization, the production. Everything about them is different, but there had to be a way to find a way to get them all on the same plane so that you could analyze it. And so it really began as a data analyzing exposition to see, who's cheap, who's undervalued, who's not, who's overvalued. And of course, that leads you to figuring out what the average valuation in the industry is. You don't know if something's overvalued or undervalued unless you know what the average valuation is. People always say, oh, my stock is undervalued. Well, how do you know? Well, I know who's undervalued and who's overvalued. And the metric that I focus on now is what's called the operating cash flow. It's the operating cash flow is the difference between gold price and the cost to produce an ounce of gold from the ground times the number of ounces a company produces. That gives you the operating cash flow of the industry. And every producer has an operating cash flow. And then if you divide that operating cash flow into the enterprise value, which is essentially a market capitalization, you get a number. And that number gives you a way to compare all the stocks. And right now, the industry operating cash flow multiple is about 8. But it goes to 4 in bear markets, 12 in extreme markets on the bull side. So right now we're around average in the middle is 8. And I look for stocks that are undervalued, that truly have an operating cash flow multiple, lower than 8. And that's really the genesis. And I've further refined that when and when you bought me years ago, I was writing a Gold Stock Analyst, which was sort of the data source for a lot of companies, and what I focused on then, when I left, when I retired at the end of 2023, people found me and said, "Would you please start writing again?" And I said, "Well, okay," because I'm still working on gold stocks as my own personal investment. But I changed my focus. Rather than looking for the top 10 gold stocks, I started looking for the best gold stocks in that top 10. So what I did is I went back through the 25, 30 years, actually, I'd been writing Gold Stock Analyst and running the numbers and the data. And I said, well, okay, suppose I just have the top 5 gold stocks. What would that give me as a return? And it turned out that the top 5 gold stocks over that period of time would had a 47% return per year. So
Yeah.
I said,
Sign me. Where do I sign up for that, John? I'd like to make 47% a year.
well, let's see. This so far since I came back, and it's almost 2 years, we're up 250%. So that's 125% a year.
I think the interview's done. Where do I sign up?
I think somewhere somebody will tell us that as we go along. But the point was that is that, as you add fewer stocks, you take more risk, and so you have to find a way to try to limit the risk. So I said, okay, so if I'm only going to be looking at 5 gold stocks, which is what I landed on, how do I find a way to minimize the risk associated with those 5 gold stocks? And so I said, okay, number one, I only want to be in politically safe areas. I want to be in Canada, Nevada,
safe jurisdictions. Yeah.
Political safe. I don't want to be in Mali where gold, Barrick just lost half their gold mine to the Mali government. I don't want to be in Panama, which shut down a mine that was delivering a big royalty return for Franco-Nevada. I want to be politically safe. So that really limits the number of countries you're going to be in. And the second thing is I wanted real numbers. I don't want to look at exploration companies. I want companies that are either producing or about to producing because they've got a feasibility study that this project's going to be making money, not some pie in the sky, arm waving kind of, but I want real data. And so then the last thing I said is I'm going to focus on operating cash flow multiple, who really is cheap. And so I landed on 5 stocks. They've changed. We've had 2 sells since we began the publication in the middle of 2024. So we replaced those, and the current list, which is up 250%, we see it as another double, and we run all the numbers at $4,000 an ounce gold.
John, one of the things that impressed me so much when I first met you, and folks, I first met John 20 years ago, and he has been my personal go-to gold analyst now for 20 years. I bought his business in 2018, I believe, John.
Yeah.
And then he had a 5-year contract with us. When that contract ended in 2023, I had also left my company, and the management that took over after I left the company decided to fold the publication when John retired in 2023. But John's back in the game, as he mentioned. He started a new research product in 2024. And as he just said, his portfolio is already up 250%. And I think that probably surprises a lot of people. And I'm sure there's even people watching who simply don't believe us because it does seem incredible. But those are the kind of results I saw from John year in and year out, which is why me and Steve Sugarreed went to go meet him in person in 2024. Sorry, in 2004, about 20 years ago. And he has done nothing but deliver these kind of results, roughly 50% a year for decades. And the thing that struck me the most when I met you, John, 20 years ago plus now, is that you did all of these calculations and all of your research with very expensive, incredibly arcane digital tools. You used a number 2 pencil, some yellow legal pads, and some printed out SEC filings. And you also, of course, had great relationships with a lot of these management teams. And I just wonder, can you recall from your career a particular investment that you made that you think really crystallizes your approach? Just one that sticks out in your mind.
Well, the company doesn't exist anymore because it got taken over, but it would have to be Kirkland Lake Gold, which we recommended around 2015. It was it had just bought an Australian mine and was producing other mines in the Ontario region, and it was run by a guy by the name of Tony McCooch. And Tony was a mining guy from stoop to nuts, from A to B, A to Z. It's just an incredibly focused guy who still is. And we got a 20 bagger out of Tony. That stock, if you'd held on, it got acquired by Agnico Eagle. And the Agnico Eagle stock value now is a 20 bagger from the $7 we recommended the stock. The stock got bought by Agnico Eagle for 0.8 of a share of Agnico. Agnico is the best gold mining company.
The best.
No doubt about it. No question about it. So that $7 has gone up a tremendous amount. It's about a 20 bagger now. That was our single best long-term until some of the ones we've got down in the portfolio. We have a couple of 5 baggers in it already, and we think there's more. We know that there's a double for the whole portfolio is going to double. But anyway, Tony is back with a new company, and that we bought in at $2, and now it's about $8, and we think it's going to go far higher, and these are not, these are just based upon what they've got, not based upon what they say they're going to get. It was based upon what they've got, and they've got a mine. They're going to have one of the top 10 silver mines in the world. It's got $400 million in cash. The cost to build this mine is about $600 million. So I doubt they've got bankers crawling all over them to finance it. They're not going to have to put up much money at all on it. But Tony's going to deliver it for us again, and they're going to deliver for my shareholders, Faith Drive shareholders as well.
Aaron, I just love the way John just says these things matter-of-factly. Yeah, I've known this guy for a couple of decades, and yeah, he was a 20 bagger the first time. So I bought his stock at 4, and now it's at 8, or at 2, and now it's at 8, and everything is just so matter-of-fact. Meanwhile, how many investors anywhere in the world have made 47% annually for 30 years? And he's like your cranky uncle next door.
It's just what he does, though. That's what he gets. Those are the results.
It's absolutely incredible. And I swear, John, you're a national treasure, but you're like so under the radar and so undiscovered. I almost don't even want to tell anyone about you, because you are the greatest single weapon for any asset allocator in the world. And I'll tell you one last thing, John, about why you've been so important to me. Aaron, you know how I have this idea. I have this mathematical idea, John. You're an econ guy. I think you'll like the math of this. There was a proof that was done in I want to say in the 1700s. I can't remember off the top of my head. 1770, 1747, something like that. Anyways, and the idea was how many circles can you fit in a flat a plane? And so it's a geometry question, and I'm sure I'm not setting it up right. But the answer is it ends up becoming a honeycomb. It's a hexagonal pattern. The most amount of circles you can fit, same size circles, of course, around a circle in a flat plane is 6. So 1 circle in the center and then 6 circles around it. And when I do all of my correlation studies of the major S&P 500 industry groups, there's 24 major industry groups that S&P 500 sets out. There are only 7 industry groups that are independent risk circles. In other words, they are not correlated to one another. So if you want to build a truly diversified portfolio, you don't need the S&P 500. You don't need 50 stocks. You don't need 20 stocks. You need 7. Now, if you want to not have single stock risk, great. You can double that to 14 positions. But if you start adding more than that in your plane, you get crossing risk. And John, do you know what the only sector is that is not correlated to any other sector at all in the S&P 500?
I bet it's gold.
It's gold. So what I've done is I've made John's work the very center of my honeycomb investment strategy. And the cool thing about doing this, John, is if none of the things are correlated, you can have much lower volatility than the overall market by having equal positions in this kind of strategy and then rebalancing it every year. But gold is actually the key to it. And that has worked incredibly for me. For almost a decade now, I've been averaging returns between 20 and 30% unlevered in that portfolio. So it is an incredible thing to have, and John is sort of the secret sauce to it. But don't tell anybody.
Well, I think we're telling a few people now, I hope. But for myself personally, I only buy gold stocks. It's all I know. I don't know tech. I don't know commodities, other commodities.
Well, John, you should definitely diversify because getting 47% a year, that's just average. That's just average. Can you tell me a little bit about where all the money went? I know for a while you had a yacht. I know that there was a villa in St. Bart's. I know there's been a lot of girls and a lot of fun. What's the current flavor of indulgence?
Just old age, I think.
Oh, you're running out of steam.
A smaller boat. I sold a place in St. Bart. I've got 2 homes here in Fort Lauderdale, but one of them is for sale, both on the water. And just trying to provide for my retirement, which ultimately is going to come.
Well, I hope you don't retire anytime soon. And it's great to see you. Thanks for joining us. Thanks for telling us your incredible story. And sincerely, John, thanks for almost 25 years now of working with me and providing my customers with just outstanding research, best in class. Thank you so much.
Well, thank you very much, Porter.
How do you argue against John Doody? How are you going to argue against that track record?
What I love about him is he's so plain spoken and there's no pretension. And when I say he did 47% a year, I know no one believes it.
Right. Nobody's going to believe it.
But it's actually
true.
Published. Like there's a full track record, not back tested.
Audited.
Yeah.
Audited.
So he did a couple things to just prove to people. He also did volume weighted pricing. Because people say, oh, well, you couldn't get the stocks. No. His entry price was volume weighted from the day he recommended it.
Yep.
So he went to these crazy links to prove that his research was the best, and it certainly is. So no one else comes close.
Yeah, and so I do want to give that website because I want you guys to go. He's not into all the fancy video sales letters, any of that.
Nothing.
His thing
There's
is
no promotion.
His thing is my track record stands on its own. Take it or leave it.
Take it or leave it.
And I would if I were you guys. So you go to www.john with an H, JOHN, Doody, DOODY, fave, FAVE, the number 5.com/Porter.
Whoa, that's a whole mouthful.
John Doody, fave 5,
FAV,
FAVE,
and then the digit 5?
5, yeah. .com/Porter. Now,
you can tell he is a marketing genius.
Now, this was their domain. I did suggest something simpler, but this is what they came up with. Don't worry, we're going to have it right below the screen. You see that? We call that a lower third.
I really do love him. He is like a sort of a grumpy uncle.
Oh, he's the fun uncle that you look forward to talking to at the Christmas party. Like when you're stuck with your family, he's the one that everybody goes to because he's going to be fun.
He's hysterical.
He's great.
And it's so funny because the funniest people are unconsciously hysterical. Like, I love Marty Fritzen's dry humor.
Yes.
No one ever laughs but me, but I think it's hysterical. Marty Fritzen at our conference last year made a joke about how Hasbro has a monopoly on the Monopoly game.
Yeah. Oh, Ace?
And nobody laughed.
I remember you horse laughing.
And I was howling in the back.
I mean, John, what I love about John is there's no F's given.
No,
John
no F's.
is John.
No F's. I love it too. He's like, I invested in this guy and he made me, what is it? What's a 20 bagger? 20,000%.
Yeah, 20,000%.
2,000%. I don't know. I'm not good at math, but huge amounts of money. And he's like, so yeah, we invested in him again. And yeah, the stock has gone from 2 to 8.
And he's going to deliver for us again.
Like it's nothing.
Oh yeah. And Porter, you know this, it's really difficult for you. It's actually
2,000%.
It's impossible for you to do business with people that you don't believe in. It's impossible.
No.
And
so listen, I'll tell people straight up, if you subscribe to John Doody's newsletter, okay, there is no customer service.
It's very little. It's
there
very
is
little.
no refund.
You get a refund, but I think it's a $500 to try it. It's a trial.
He's not interested in marketing.
He not at all.
He says very plainly, if you want to make money in gold stocks, I can make you more money than anyone else in the world in gold stocks. That's all I do. If that's what you want, come to me. If it's not what you want, I'm not trying to sell you.
And there's only 5 stocks.
And by the way, why would he try to sell anybody? I know for a fact he has been invested in gold stocks for more than 30 years. Right. That guy has more money, and I'm pretty sure he doesn't have any children.
No, he doesn't.
I don't think so. I should probably butter up to him.
I don't think. Yeah, you might be able to sneak into the will.
Remember me?
You might be able to sneak into the will.
Anyways, he's a great guy, and I hope everybody enjoyed that interview as much as I did. He's a legend. He's one of the few people in the newsletter business that is the real.
Yes.
And if you talk to people who've been in the business for a long time, kind of like Bill Bonner, kind of like Chris Webber, kind of like Kurt Rischebash, who used to be. He's one of the very few people that the other writers all read. Jim Grant is one of those people too. So he's the real deal, and I really hope anyone who wants to be invested in gold stocks will subscribe to him because he's the very best of the best.
Yeah, absolutely. So again, we will put the ticker up. You can see it right below. That's it. Type it in. Also, if you're not on our email list, super easy. PortersDailyJournal.com. PortersDailyJournal.com.
That's a good one. Porter's
we
Daily Journal.
We came up with that one.
Yeah.
That's ours.
That's good.
So
that's a good one.
Get on our email list. You'll get your daily journal, which, by the way, you have been in the trenches like I've never seen you before.
I'm fired up.
I mean, it's impressive. Not since the S&A Digest have you been more focused.
I don't know what's going on with me. I'm enjoying the work right now, folks. Get it while it's hot.
Yeah, get it while you can, because that may die off, and you might be on a yacht one day.
And don't forget to order your chud hat. We're going to be selling these at the conference.
Oh, okay. All right. We got our conference coming up.
I think the idea is I want to do like a P and company on the front.
Okay.
And then chud is like, like your name in the back. People have their name on their hat. So it'll be Porter and Company on the front, and then chud.
I like it. Hey, you guys heard it here first. All right, guys, that's our show for today. We hope you enjoyed it. As always, write to us, which you never do. Podcast feedback at porterandcompanyresearch.com. Podcast feedback at porterandcompanyresearch.com.
Yeah, listen, I have a specific feedback request. If you have made money with John Doody, and I know you have if you've read him before and you've invested with him, send us a note about it. We'd love to give him some good some good positive feedback in our journal and talk about how much money he's made for our customers. Thank you all very much.
Thank you for listening to the Porter & Company Black Label Podcast with your hosts, Porter Stansberry and Aaron Brabham. We'll see you soon.